What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I got 5 high-yield dividend stocks that are less than $30. Some of these are definitely on my radar. One of them I own. One of them I used to own. I'm going to definitely do a dividend stock analysis. I'm going to do a company review. But I just want to thank you guys, too. We are at 5,000 subscribers strong. You guys have been amazing on this channel. I wouldn't be doing these videos without you guys. The more you guys are active on my channel, hitting that notification bell, getting active in the comments section, smashing that like button, I'm going to post more videos. And I think what I'm going to do is start posting YouTube like shorts just on a hot dividend stock on days that I don't work. So I'll give you ahead of time. But tomorrow and Sunday, I'll definitely do a YouTube short on a video that on a stock that I see that's very hot right now. Let's check these stocks out right now. Before we even jump to these stocks, I want to introduce you to my buddy Dividend Cultivator. I have an affiliate link in the comment section. I know you guys asked me a lot of questions in regard to what's a good stock, what's another stock. His stuff that he has may help you with your dividend investing strategy. So he has a thing called Too Much Money, how to create an automatically growing perpetual income machine with dividend growth investing. He has some packages. If you're interested, feel free to click that link in there. He's definitely my investor of the week that I want to introduce you to if you guys are interested in bumping your game up with your dividend investing strategy. So let's jump to these stocks real quick. Who are these guys? One Republic International Corporation. So these guys, I found, did some digging on them, and they look like a really good company that is cheap. Okay, let's look at them from the beginning. They're not jumping up too fast. If you look at one point, they were actually killing the S&P. They took a nosedive. They're still down a little bit, so there's an opportunity to capitalize on against the S&P and on the stock because it's down. Now, it's not to where it was right in January, but it's not to where it's beating the S&P right now. So I like a lot of stocks that aren't doing too well against the S&P and are slowly increasing their dividend. One example is BTI that I own, British American Tobacco. Another one is Altria. They just increase their dividend over time. You know, they're a dividend stock. Let's check out this stock and see what they're about. Symbol is ORI, by the way. So I'm on their website. Our mission is to provide quality insurance, security, and related services to businesses, individuals, and public institutions, and be a dependable long-term steward of the trust that policyholders, shareholders, and other important stakeholders place in us. So their success comes from focus and staying power. Here's just some things that they have. Their compound total return with ORI, National Gross Domestic Product. They have all the data on their website. I'm on oldrepublic.com, but this is what I like about them. They call this the Lodestar, and they discuss their community with their public interest. They kind of show you like their mission statement. I really like that about these guys, and this is why these guys are on our radar. Our capital providers, shareholders, and debt holders. So they're just talking about discussing capital as the lifeblood of a financial institution, is the source and continuity of the enterprise. So I like this with their philosophy and the way that they are just discussing their mission statement right on their website. And let's check out their companies as well. Wait a second. Before we even jump to that, according to the recent edition of Mergent's Dividend Achievers, Old Republic is listed in the 58th place amongst 111 publicly held companies out of thousands considered that have posted at least 25 consecutive years of annual dividend growth. Moreover, Old Republic has paid a cash dividend without interruption since 1942 and has raised the annual cash dividend payout each of the last 40 years. I like it. Let's see how many companies they got. I had to like stop right there and show you guys like, wait a second, we got some better stuff. So here's just some things with Moody's and Standard & Poor's. They have pretty good ratings. AM Best. Now these are all the companies that it seems like that they're a part of. Surety Company, National Title Insurance Company. It says stable. Old Republic International Corporation long-term debt. So you're getting some good ratings by Moody's, AM Best, and Standard & Poor's. But let's check out their dividend history. That's what you want to see if you're a dividend investor. Why is this a high yield dividend stock? Why is this a good one? Let's check that out. Beautiful. 18 cents, 19, 20, 20, 21, 22. PE ratio 4.6, dividend yield of 3.6, annual dividend of 88 cents. And how much is it? $20.40. That's not bad. That is not bad at all. Look at this special cash dividend. Lucky. But slowly it's increasing, and it's only $24.40 with a 3.6% dividend yield. I like stocks. If you are new to this channel, I always like dividend stocks that are right around 3 to 5% range. If you can get 6 or 7 and it's a stable dividend stock, oh yeah, that's good. But 3.6 is really good, and it's slowly increasing its dividend over time. And they just said on their website that they pretty much take pride in being a dividend stock, and they are a dividend stock for you guys. So a 3.6% dividend yield, beautiful dividend stock. Let's check out the next one. Who are these guys? Monmouth Investment Corp. Who are these guys? First of all, let's see how they're doing. They're $18.85. In the past 5 years, they were at one point beating the S&P, and they just went a little bit down, and they're slowly catching up. They're not jumping up too fast. And during the pandemic, when everybody hit the panic button, it was $9.88, back to $18.85. Who are these guys? Symbol is MNR. Who the heck are these guys? Let's check them out. These guys are a real estate investment trust. So at Monmouth, we are not striving to be the largest company. Our goal is to be a better company. Our focus is on the long term, for which that is lasting of value takes time. This is what attracted me to these guys, and this is what has them on my radar, definitely, because I'm trying to expand a little bit with the real estate, with a portfolio in my M1 Finance. Let's check this out. Pretty big portfolio, and this is some things that they carry. This is actually in Richfield, Ohio. So here's some property that they have. So FedEx Ground, Home Depot, Atlanta, Milwaukee Tool, UTLA Beauty, Beam and Santori, FedEx. So they have some really good things. Best Buy. These are pretty stable buildings that they own. FedEx, International Paper, Home Depot, Rhinai America Corporation. These are really good, stable companies. General Electric. I know GE isn't the most attractive dividend stock right now. And Pharmaceuticals, Anheuser-Busch. These are places that aren't going anywhere. They're going to continue to pay rent. They're going to continue to get money on appreciation. But this is the type of structure that they have. And this is just in, let's just do Richfield. Let's see what they have in Ohio. There's a Best Buy in Cleveland. So these are just some of their featured properties. This is a good stock. It's going to get bigger. It's cheap. Let's check out their dividend history. Okay, so we have a real estate investment trust that is slowly increasing its dividend. Now, rates are good dividend stocks. I own a lot of rates, so it's $18.80, 3.77% dividend yield, PE ratio 25.13, annual dividend of 0.72 cents. So they have some pretty stable buildings. People are busy. It's, if you think about a recession or pandemic, those are pretty much recession and pandemic proof. These places need to be open. These places things need to go on. So these buildings are going to be fine. Again, none of this is financial advice. This is for entertainment purposes. But looking at this is definitely on my radar. It has slowly increased its dividend. It's $18.80. It's less than $30. Let's jump to the next one. Like a unicorn stock. First of all, Arbor Realty Trust, symbol ABR. I have not seen a mortgage-backed rate. This is a mortgage-backed rate. I will show you financially how well it's doing because it's running AGNC. It's running circles around AGNC. Everybody loves to discuss AGNC, which I'll add real quick. AGNC doesn't stand a chance against these guys. Now, AGNC is a monthly dividend stock, which I consider a yield trap. And it really hasn't gone up. Its revenue hasn't done really well. And Arbor Realty Trust is a quarterly dividend stock with a high dividend yield. I have to show you financially how well these guys are doing because it is like for $17.70, a mortgage-backed rate that has an excellent business model. Is that like impossible? This one is my favorite mortgage-backed rate. This is probably the only one that I'll own. Now I do have a covered call ETN, which is with REML as a symbol. That's a mortgage-backed one, but that's kind of a scatterbomb. I mean, you know, you're not. I'm not expecting to go big on that, but it, you know, it does. It's a covered call. But this is a mortgage-backed rate that's doing so well. I mean, I just showed you it's beating the S&P. It raises its quarterly dividend, which I'll show you. And financially, you're going to be like, why didn't I buy this? This is a mortgage-backed rate. I'm just showing you the revenue before I jump to their dividend history. This is a mortgage-backed rate. Now look, okay, it went a little bit down, but look at how much the gross profit is. It's going up. I mean, a mortgage-backed rate is just running circles around the S&P. The S&P, a mortgage-backed rate is being the S&P. It has a very nice dividend yield. Total revenue is up. And it's incredible the way they have this business model. I would love to have an interview with these guys, with Arbor Realty Trust, and post a video on it. It's just incredible, their business model. And maybe I'll get them to take the bait and say why they're better than agnc. But you know, let's try to get those guys on there if we're lucky. But let me show you their dividend history. At my phone, like when I was just switching over, my gosh, my Twitter's my people are tweeting me like crazy. I tagged some very good investors, Dividend Cultivator, you as well. Matt Money, I did mention you, so maybe you can sing for us in the future. But look at this, 13 cents, 15 cents, 16, 18. Okay, maybe a little bit of a blow here, but 34 cents, PE ratio 7.17, dividend yield is 7.62, annual dividend 136. Gee, I wonder why I keep on buying more. And guess what? I'm almost at the point on my E-Trade dividend portfolio that I'm buying a new share each time. I absolutely love it. I love the model of it. If you look at agnc has decreased its dividend over time. I posted enough videos on agnc, but I absolutely love this one. I mean, this is when I look at stocks, I mean, sometimes you can ask, is this, you know, Roth IRA material? Is this? This is actually traditional and Roth IRA material because it's beating the S&P. I don't understand. These guys are geniuses. I don't know. I can't even explain to you how these guys have pulled off the mortgage-backed rate, beaten the S&P, have a traditional Roth IRA material, because my philosophy is when you have a traditional or Roth IRA, you want your net asset, you know, to increase. You want the dividends to increase. You want the price per share to increase. And it has done all three, actually all four. So those are kind of my criteria for a dividend stock to put in a Roth IRA. Now, when I had my Acorns account, I switched everything over and threw it in Prudential, and they're just like Arbor Realty Trust. The qualifications that I look for in it, it's unbelievable. And it's less than $20. I mean, this is something, instead of going out, you know, to the bar tonight or Saturday night, why not just throw $60 in this? Again, this is not financial advice, but you're going to get a 7.62% dividend yield out of that. Money makes money. Just remember that. Let's go to the next one. And how many times have I said take it to the bank with Huntington Bank shares? Symbol HBAN. This is a stock that has took a nosedive during the pandemic. Let's talk about recession. During the recession, just in line with the S&P, and all of a sudden, boom, took a huge blow. And look at this. Look at this price per share. It's losing big time against the S&P. As I always say, that alligator chomp, when you see the chomp, you know, one going up, one going down, ooh, you got to be careful. But again, this is a bank. Banks make money. Like I said, anytime you swipe your credit card in a machine, swipe it at the store, and let's just say it's Huntington Bank shares, they have to give Huntington Bank shares some money. So they're getting money from people's credit card interest. They're getting money from you swiping your card. So if you make your payments on time, they still have to pay a fee to Huntington Bank shares because it's a Huntington Bank shares card. I'm going to give you an example. So things changed in where I'm at in Summit County. Mark's is a store I go to. It's right pretty much where I'm at by my parents' house in Summit County. It's right where I'm at in Lake County. And guess what? They never allowed credit cards. And then they had to because nobody was coming in. And guess what? They have to pay a fee to people like this with Huntington Bank shares. So these guys are making money. They're making money from car loans. People are throwing money like crazy in used cars, which doesn't make any sense. They're getting outbid with that, getting loans on houses like crazy. They're going to make money. Bank, you have to be stupid as a bank to go out of business. It's either you get bought off or you suck. And it's either of those two. And with your name being gone, these guys are fine. They're a big company. Let's check out their dividend history. Okay, so look at this. 2012, 4 cents. So each year, they're almost generating another cent. Now, look, pandemic hit. Understandable that they haven't increased a cent. They're 15 cents right now. 4.27% dividend yield. It's $13.87. I'm actually considering, because I'm at just about 25 shares of Pfizer, bumping Pfizer down 1% and throwing these guys in here. I know I'm getting ahead, or jumping ahead with my M1 Finance dividend portfolio, but these guys are cheap. They're 4.27%, a PE ratio of 12.02. I need to add these guys soon. I need to capitalize on this. I need to stop sitting around saying that I'm looking at it, and I need to take action. I think Monday I'm going to make some changes, and I'm thinking on either adding it to my M1 Finance dividend portfolio or adding it to E-Trade. I can almost guarantee you it's going to be on there. Somewhere it's going to be on there. So I'm just telling you right now. Let's jump to the last one. Here's another one, Ennis. Who are these guys? First of all, they're $19.61. We need to figure out who they are. Past 5 years, they haven't done too well against the S&P. They were in line, and then, they're right about there. This is one that's, I'm like, I need to look at this, study it a little bit, and go from there. It's very interesting with this stock. So let's check them out and see what they're about. So Ennis is a nationwide footprint with 55 facilities across the U.S. engaging in print and manufacturing business that forms a commercial print and wholesale trade. What we do, whether it's any type of foreign financial product, presentation, folder, envelope, tag, or label, Ennis has the printing capabilities to support your business. So our products for 105 years, Ennis has specialized in manufacturing and supplying the most innovative and unique products in the print industry. Let's look at this first. Okay, they have 20 states and 50 facilities. What are these guys about? Okay, advertising, specialties, checks and software, compatible forms, business forms and supplies, custom business forms, e-commerce. That's good because, you need to adapt. Nobody, they're changing things from printing, and they're a lot more digital. Commercial printing, financial security printing, integrated products, presentation folders and packaging, point of purchase printing, labels, pressure seal mailers, and tags. Okay, I can see why they're really good and why they're in demand. It makes perfect sense. They have ad concepts, ribbons, awards, and adhesive notes. People have adhesive notes all the time. That's good. That's really good as a company. They still have, this appears to have a lot of things in demand. Let's check out how much revenue they made, because hold on, we need to look a little bit more in detail with these guys, because I don't know that much about them. I still want to study them a little bit. That's what you should be saying to yourself. Okay, is this technologically sound? Is it competing? We need to figure that out first before we make a call on this being a really good stock. 380.379, 385, 356, 370, 400.782, 438.412. Pandemic, totally understandable with it going down. Going up. It's going up. We can play the pandemic card, but it's going up over the past trends of the years. That's pretty good. That's very good as a stock. So we know what they're about. Now let's check their dividend history. We always have to check their dividend history. Somebody's increasing their dividend over time. Slowly. EBF symbol, $19.61. Cash is 25 cents. It's going up. Dividend yield 5.03. PE ratio 18.68. Annual dividend of $1. These 5 stocks, this is very interesting. I like the 3 to 5% dividend yield. 5%, this is a really good one. So this one's on my radar. I literally have it written down on a note card if I should add it. I mean, I'm getting 25 cents. And then if my M1 Finance dividend portfolio starts blowing up, or if I just decide individually to throw it in E-Trade, I like my schedule with that 1, 4, 7, and 10 declaration date. Okay, we got ourselves a good dividend stock. So let's review. ORI, MNR, ABR, HBAN, EBF, no AGNC. Remember that. I'm not going to discuss AGNC. These 5 stocks have serious potential. They adapt, they pride themselves with their dividend history, and I think they're very strong. So again, none of this is financial advice. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I waited to post this one until today since I had time. And you know, yesterday, I'm sorry, or the day before that, I had like an edit error on I just noticed that with SPHD and the QYLD. So I was like, oh shoot, I was looking at it today. I'm like, oh geez, that completely didn't change. So I was like reading it and I said like $17 and I stopped. I was like, oh, I'm like, I got to edit that out. So this is what's going on with this stock. Love these. Love these. I'm telling you, Huntington Bank shares, I'm probably going to be adding on my M1 Finance dividend portfolio. I need to figure out where I can squeeze it in and what I'm going to do with my strategy, because things are really picking up with that, and I need consistent dividends, some stocks to go up. I don't know, maybe E-Trade. I mean, it's $13.82. I got to make a decision. Maybe you'll find out about it on Monday or Tuesday, but I can almost guarantee it's either going to be an M1 or it's going to be on E-Trade. I just haven't figured that out yet. I think when I get certain dividends, I don't know. It's driving me nuts. But so if you again, make sure you smash that like button. Dividend Cultivator's link will be in the comment section. And if you are new to this channel, make sure you smash that like button. Make sure you subscribe to that notification bell so you don't miss future videos. Free for you guys. You guys take care. Have a great weekend.